Good morning, everybody, and welcome to Beat the Bell, presented by Kane Capital. Hope that everybody had a phenomenal weekend. It's Monday, which means it's time for Beat the Bell, and it's time to trade the stock market. All right, so last week, Thursday, Friday, the market set off a squeeze. Thursday was a strong day. Friday was even stronger. The follow-through that many thought wasn't possible played out really nicely for the Bulls. And so now is the question of, will we see continuation this week? Will the market chop? Will it sell off? We've got a busy week, loaded economic calendar to talk about it. We've got a panel of traders, starting with Diamond Trades. Diamond, good morning.
What's going on, guys? Hope everybody had a great weekend. The only thing that was hotter than my Bet the Bell record in February was the New York Knicks. The New York Knicks have won 9 in a row. We love to see that. Hopefully we can both continue this hot stretch into March. Let's get after it. That's right, baby. Let's go.
Go Knicks.
Let's go.
All right, Moe Mamba.
Good morning, brother. Diamond, Knicks, yeah, they're on one, man. They're on one for sure. Let's have a great week, guys.
Snipes, good morning to you.
Good morning to you too, man. Let's make some money today. I'm really excited. Got a big week coming up, and let's get to it.
All right. That's what's up. And last but not least, Ramsay Rippers.
What's up, guys? Hope everyone had a great weekend. Let's go. Let's do it.
All right. Let's dive right into it. Diamond, Fed forecast, economic calendar. Going to have to run the show solo today. Mander's unfortunately not here.
That is true. We're going to have to run solo today, but that's fine. We have a lot to cover. Anyways, let's go ahead and start with the economic calendar. This week, as Alejandro mentioned, is going to be pretty busy. Today, we've only really got factory orders, but tomorrow and Wednesday, we have Fed Chair Jerome Powell will be giving testimony in front of Congress. That's sure to move markets, so just be careful if you're going to be trading around those times, 10 o'clock, both tomorrow and Wednesday. Wednesday, we also get JOLTS job openings at 10 o'clock in the morning before we wrap up the week with those initial jobless claims on Thursday and NFP on Friday. NFP, again, tends to be a market mover, so make sure that you're paying attention to that one. That comes out pre-market on Friday. As Alejandro mentioned before, March got off to a really hot start, right? We saw that rally late Thursday, and then pretty much most of the day Friday, the markets were lifted by the fact that we had received some strong economic data focusing on the services sector. So global services PMI actually came in, and it rose to 50.6 in February versus 46.8 in January, suggesting the strength in the services sector despite both higher prices and higher borrowing rates. So you have these headwinds that are facing the services sector, both in the form of inflationary pressures on their businesses, and then as well, you have, just the higher cost of capital with the tighter financial conditions with the raising interest rates. And you're still seeing that sort of strength in the services sector, which is good to see. That's an encouraging sign, right? So it's showing that services sector will continue to remain resilient. And so we're going to have to pay attention to that going forward. And it makes investors weigh the balance, right, between, okay, obviously having higher prices is going to negatively affect the economy. But on the other hand, if it's fundamentally strong, like we kind of saw in February with the services sector holding up and people willing to spend more money on those essential core services anyways, it kind of makes you weigh both the benefits and the drawbacks of, okay, we have these headwinds in inflation, but we also have a strong economy. Which one is going to play out? We also had the Institution for Supply Management Services Index come in harder than expected as well. So a little bit of extra juice there for the services sector of the economy. And then back to Powell. So we have Powell's testimony this week. This is really setting up to be very similar to that first and second week in February, where we have Powell coming out and giving some remarks that are not necessarily like sponsored by the FOMC. He's going to be coming in and giving his speech. Last time it was at the Economic Institute of Washington. This time it's going to be before Congress. And then right on the heels of his speech, we're going to get non-farm payrolls, right? This is exactly what happened last month, where he came out. He talked about, how the Fed and the market sort of have a differing opinion on where inflation is going to go, and we're just going to have to see. 3 days later, you get this 500K jobs report from January, and everything starts to hit the fan, right? Everyone starts to get a little bit confused. So here's the payroll growth projections for February. We're going to get this number on Friday. As you can see, that last little blip there in January where we had added 500,000 jobs, much higher than consensus. Forecasters are expecting that number to come back down to like the 215,000, 200,000 payroll growth area. So definitely should moderate from that 500K read that we got back in January. But again, we're gonna have to see. They were only projecting like 200,000 in January, and they were off by like 150%. So definitely not a foregone conclusion. We'll have to see what that number looks like when it comes in. Bloomberg economists say that many of the high-profile layoffs, like a lot of the ones that we saw in January, can take up to 2 months to show up in the jobs report. And so, according to Bloomberg, the March numbers are actually going to give a clearer reading as to where the labor market stands, right? Where the demand within the labor market stands. But the FOMC won't have the luxury, obviously, of seeing that March report before having to decide what they're going to do with interest rates in their March meeting. So this NFP number that we get on Friday is definitely going to have a large impact on what the committee decides to do going forward, whether that's going to be a quarter point hike or a 50 basis point hike. We start, really starting to actually price in, even though it's still unlikely. It has gotten a little bit of boost in terms of the probability for the March meeting. So I guess we'll just have to wait and see. Additionally, like I just mentioned, that federal funds rate has really started to price in about 5.5 on the upper end of the terminal rate. And so we'll have to see if this NFP number this week is going to impact how the futures are pricing in this peak policy rate from the Fed. As of right now, they're pricing in about 5.5 on the upper bound. So we'll see if any of those things change as we get this data that comes in this week. But that's going to wrap it up for Fed Forecast. I will pass it back to Alejandro.
Awesome job there, Noah. Thank you. Let's move over to the system now, guys. So I've got two charts pulled up here. On top, we have the 30-minute chart. On the bottom, we have the hourly chart. And the reason I wanted to do this multi-time frame analysis is because I want you guys to see the power of what happens when both charts are telling the same story on both time frames. So on the 30-minute chart, late Thursday, we got the break over the 50 SMA, okay? That's sort of our first signal that market sentiment in the short term may be shifting. But of course, we know that we have to go then and take a look at the hourly chart. The hourly chart, very similar picture. Late Thursday, we get a break over the 1 hour chart. But why did this move see such strong continuation? Okay. That's the question you have to be asking yourself. Now, when I look back at the hourly chart, and I come back and I see that we hadn't traded above that 50 SMA on the hourly chart since the 16th rather of February. That to me shows me how powerful the break over the 50 SMA was for the market and what it could potentially mean. So we see that the 50 SMA is coming down hard. It's in a strong downtrend for over 2 weeks before it's finally breached. Because what happens is we've had breaks over the 50 SMA on the 30-minute chart, okay? As you can see here, that have gotten no continuation. So why was this one different? The hourly chart was telling us, okay, we also got a break over the 50 SMA on the 1 hour chart. So that could mean that the markets could really catch fire. And that's exactly what happened. So there was some really nice continuation, about 75 points off of the 50 SMA on the 30-minute chart, about 35 points from when we got the actual buy signal on the 30-minute chart, the bullish cross of the 10 SMA over the 50 SMA. So now coming into today, it's an interesting situation, right? Because we've seen 2 strong days in the market. Typically what happens is we start to see chop. Now, we don't have to guess that the market is going to be choppy. We don't have to predict that the market's going to be choppy. We can use the system, and what we can do is we can wait for the 10 SMA to be broken, and that is typically when the market starts to chop because it's our visual representation, momentum, and trend. So when we lose that trend, it's simple stuff, right? 10 SMA serving as trend support. If it loses trend support, the market tends to chop around a little bit. Also, very important to note, right now, we are about 60 points extended from the 50 SMA from Friday's close. So if the market continues to trade strong, we're actually going to be heading into overbought territory, which is 80 to 100 points extended from the 50 SMA on this 30-minute chart. And that is typically a spot where the market cools off, okay? So understanding that up here, even if things look strong, the futures are trading higher once again, about 12 points. You're kind of playing with fire, right? We want to see, you might want to see a move like we did on Friday, a super nice trend day higher, and I'm not saying that it's not possible, but we are heading into overbought territory, 80 to 100 points extended from the 50 SMA on the 30-minute chart. Just something to keep in mind. But of course, right now, the bulls are in control, guys, above the 50 SMA on both the charts. Market looks strong, but today is going to be telling. And of course, there's some things on the economic calendar this week that can definitely stir things up. So important to be on our toes. But that's going to do it for the system. Now we're going to go over to Ramsay Rippers for Bet the Bell. For the system, I'm going to pass it over now to Ramsay Rippers for Bet the Bell. Good morning.
Good morning, guys. Morning, guys. Hope everyone had a great weekend. Don't really need to sum things up as far as what happened last week. Alejandro and Noah did that very well. Indices moving a little bit this morning in the pre-market as of the last 10, 15, 20 minutes. SPY's up 0.33%. Let's bring in the panel. Let's see the guys. I want to know green or red today. What do you guys got? Let's start with Diamond.
Wait, where's the record? Hold on. Where's the updated stats? No, that's not updated.
This guy Hondo, man.
That's lagging.
Whatever. All right, so I will go. I'm gonna go green. I don't think that today's really. I think today's a coin flip, like I said, with the catalyst tomorrow and Powell speaking. Extended range both Thursday and Friday. Usually, you tend to chop around that third day. I think it's a coin flip. I'm gonna go green though.
I'm going green as well. I think the market's going to be green today.
Let's go to Moe and then Snipes. We got 2 green.
Yeah, I'm with Diamond on this. It's going to be 50-50. But I'm going to go red.
All right. Snipes.
Yeah, I'm going to have to go with red after a strong day like Friday. I think we could see a little bit of a pullback.
Gotcha. Alrighty. We're going to stick with the indices, stick with SPX. I believe we closed on Friday 40.35. Maybe it was 40.45. About 40 points above that $4,000 level. What I want to know is, do you guys think SPX holds 4,000 over or under by the end of this week? Diamond, talk to me.
Under. Under. I'm hoping that one of these catalysts this week starts this whole sell-off. And, this is just like that dead cat bounce before SPX hits the gulag. So I'm going to go under. I think we close under 4K this week.
Snipe.
I'm going to have to go with under, but I think next week we might have a shot of going over. But I think we're going to have a little bit of rejection.
And Hondo.
I'm going over. I think in the next couple of weeks, things will look pretty nice for the market.
Mo.
So it's not just today that's 50-50. It's really all week, right? We have a shitload of data coming out and events coming out, but this whole week is 50-50. But going about when we do go over market analysis, you'll see why. I'm going to go with this under.
I'm excited to see that market analysis because I want to see over. I want to see 4,100 this week. That's how I'm feeling. Let's get into our last question. Ryan, please pull up the Apple chart from this morning. So we got a which comes first question for Apple. Right now we're trading at around 151, I believe. That's where we closed on Friday. So basically equidistant from the high of this range that we've been trading in, these recent highs, 157.40, and this gap fill on the daily, 145.91, just that major gap up on Friday from Thursday's close. Which do you guys think hits first, this new high or the gap fill? I will say I haven't checked Apple this morning in the pre-market. I assume that we're trending upwards. Yeah, we're at 153.80, so not so equidistant as it was before. What do you guys think? Diamond.
Yeah, I'll start with the gap up. Obviously, I'm gonna hedge my under bet in SPX with an over bet on Apple, and yeah, I think seeing Apple break those February highs would put a lot of people at ease, right, and make us think that we're gonna get that next leg up before the Mamba market analysis really comes in and absolutely catches those people off guard. So let's see it. Over.
Mo, perfect timing.
Oh, yeah. So, hey, I like the hedge right there with the SPX, man. 157.38 is the highs. Yeah, big level, man. Big level there. I do think we'll test it. Yeah, I do think we'll make new highs. Yeah, I'm with Diamond on this one. We're right there, $4 more bucks, and we'll go over analysis. It'll make more sense, but yeah, I'm going with the over. With the highs.
Hondo, tell the Bears what they want to hear.
Yeah, my ass. 157 is coming in hot. Goldman rated Apple a buy with a 199 price target, I believe. First time they rated Apple a buy in 6 years. I'm expecting it to. That's why it's trading higher. And the futures got a jump off of it last night. So I'm expecting a nice move in Apple this week.
And last but not least, stock Snipa.
I'm going to be the devil's advocate here, and I'm going to have to say no. I think we'll go to that 145.91 level first. It is very big that Apple did crack 150. That's a major psych level, but we are coming up on some nasty levels, and I think it's very likely that we could reject.
All righty. Interesting group of picks this morning. That's going to do it for Bet the Bell. We'll pass it back to Hondo. I'm excited for this Mamba market analysis. Let's just get right into it.
Yeah, let's go straight over to Mo.
Go ahead here and share my screen. It's massive. They were just infamous trend line right here. All right, let's get into it. So real quick, just a recap of last week. You remember, guys, I spoke about what the pattern that's been playing out since the highs, right? The break of the high, the dead cat bounce, new highs off the dead cat bounce right here. And then you got the new high right there. And then you came down and made new lows. Same thing, dead cat bounce, formed resistance, made new highs. Then you came back through, new lows, right? Same thing here, dead cat bounce, then new highs, broke through. Now you're looking to come down. Now we had the inverse head and shoulders, left shoulder, head, right shoulder right there. What did we say? What did we say last week is I'm expecting a break, hook, and go. Why? Because we do have a daily demand zone down here, and we have your neckline. Usually with patterns, you do get a breakout. You come back and retest that neckline, that trend line, and then you continue back to the upside. Now, reason is I'm calling 4,000 on SPXs. I do not think we do come through and break this high on SPY, let alone this resistance right here, right? So this double top right there, I don't think we'll come through and break that double top right there at 410.5. And we do have a gap to fill on SPY. Now, this is what I'm thinking will happen. Today is going to be a 50-50, right? We'll just go day by day, see what they give us. It's going to be really hard to get direction on this. But if I were to go about price action, I do expect some downward momentum today. We're opening right at 405. You do have good resistance. This is the top of your daily supply, this 405, 406, right? So if we open up here, I am thinking we do have to test this, right? Come down, test 403. If we're able to break through 403, I got to move down to about 400.65 to 400. If you go in your shorter time frames, that's going to be a little demand zone there. Watch that, and then I do think we bounce into this gap fill right here, fill the gap, and then I think that'll be the highs this week, and then we come back through and test this demand zone once again and see if we can come through. If we come through, we'll go about it then day by day. But for today, it's going to be tough. It might be chop. We might even chop just within this daily supply, right? Just stay here, and then we'll see what tomorrow gives. I think starting tomorrow, we're going to have lots of volatility this week. So just be cautious out there. I'm not expecting a trend day. Who knows? We might get it. You never know what happens. This market has been wild, but I do think we do pull back at the open, come down at least test 403. And if we're able to bounce back and come up here, or if we do get through, I do have a move down to that 400.65 level, which will be sweet, right? That's about $5 move down to 400 to 400.65. Hey, I'll take that for today. Would not mind that at all. But I'm not expecting highs. There is always a case where we do break, right? If we do get through, I'm going to have to target this gap fill today, right? I do have to target this gap fill today. But I'm really leaning towards the bearish side and do expect a pullback after two strong moves into a supply zone here on the daily time frame. All right, that'll do it, Hondo. Thank you.
All right, Mo, great stuff there. Guys, it's going to do it for this morning's show. Appreciate you guys joining us. Happy Monday again. I'm fired up to trade. It's going to be a good week. Manifest it. Good luck to everybody who's watching. Remember to manage risk, trade smart, do your thing. We'll be trading live all week in the Kane Capital Discord. You can go to kane-capital.com to sign up for our 7-day free trial if you'd like to trade with us. Other than that, appreciate everybody that watched. If you're watching on the YouTube, do us a massive favor and like and subscribe to the channel. That helps us out a ton. Let's do it, guys. We will see you back here on Wednesday morning at 8:30 a.m. Eastern time. Have a good one, everybody.